Hello and welcome. You're watching Closing Trades here on ET. Now 0.5% higher on the index. 26,000 taken out. 26,050 in fact is what we're currently sitting at. So it's a good day of trade. In fact, with what started as a very tepid day has turned out to be decently solid. What's leading the rally? It's surely metals. Let me start the list with an Adani Ports, which is up 3% odd. Mind you, some of the Adani names came out with numbers yesterday, and therefore some of that also impacting the entire group stocks, regardless of the name. You're looking at NTPC, which is up nearly 3% as well. JSW Steel up 2.5%. Adani Enterprises up 2.5% as well. So the Adani twins doing fairly well. Power Grid up 2.3%. Tata Steel up 2% as well as HCL Tech is also up 2% in trade. So you're seeing good gains, good breadth on the Nifty 50 index, 35 advances to just about 15 declines. But there are some declines, 2% lower on a Coal India on the back of those numbers that have come out. Dr. Reddy's is down 3.5 odd percent, 1.3% lower on an Eternal. M&M down 1.3% after its supplier Bosch is seeing some bit of pressure, especially in importing some of the semiconductor material that they do. So you're seeing some bit of pressure coming in on M&M on the back of that. I want to also talk sectors very quickly. You've got auto, which is down 0.7% on the same subject. That one is down 0.7%. 0.8% lower on FMCG. IT is down 0.6% thereabouts, 1.9% higher. My apologies. FMCG is up 0.8%. IT is up 0.6% and metals is doing very well. That's where all of the shine is, 1.9% higher in trade. So doing very well for itself, some of those indices. Auto is the only one which is sulking. PSU banks sitting absolutely flat in trade. So you want to watch out for that one as well. But Kunal also here with us. Kunal, what are you spotting on charts and what are you making of today's day of trade?
So again, I think it's a very good move for the index. The premium is holding up to that 180 points. We're discussing this in the morning, that the best way to judge the market at the start of the expiry is how traders, expect the markets to be in terms of premiums for the indices. And, the premiums for the Nifty and the Bank Nifty has swelled up quite well. We are almost at 190, 95 points. The last I'd seen for the Nifty futures in terms of premium. That I believe is a very strong indicator that we are looking at a further uptrend continuation. And it's been a fantastic breadth of the market. Look at the way in which many of the sectors have seen a strong follow-through up move. It started off with metal names doing pretty well, PSU banking stocks which have been doing exceptionally well for themselves. And now you have the individual themes, the realty pack, etc., which are showing signs of good strength. Today you're seeing a very good recovery, and I would probably expect that this is more of short covering for many of the PSU counters. The power finance names, etc. So I think you're looking at a point of the markets where huge underperforming stocks and sectors are making a very strong comeback, and the leadership sectors are still holding on to their higher end of the price trend. So that's a very classic indication that it could just about be a matter of time for the index to hit lifetime highs.
Okay. Some of the movers today, Kunal, and among those are the metal names, doing exceptionally well in trade. What do you make of this move?
Yeah, this is a very strong and powerful move. For example, SAIL today has clocked one of the best volumes the stock had shown over the last, I think, many months. It's almost like a 12.5 crore of volumes on the cash side for SAIL. The last time I think the stock had seen such kind of a volume was, I think, in 2024, Jan, Feb, March, the first quarter. In that sense. So after that kind of a time frame, you're looking at one of the stronger moves accompanied by volumes. That's again an indication that we are looking at a tilt back to the high beta. It's a classical tilt because if the market gets onto that risk on mode, you see metals, you see realty, you see PSU banking names, the PSU stocks outperform. So it's not just about those individual sectors, it's the tonality of the market which is very important. We are in that zone where traders, investors are confident of holding on to long positions. The news flow is adding on to the positivity, or at least soothing the markets and not disappointing the markets. And that's also one of the reasons why I believe that this trend will continue for many of the sectors. Albeit, the names like SAIL, for example, at 140, 42, 43, what the stock had hit today, it seems to be slightly overbought on the hourly charts. I might expect some bit of cool off over here, but the theme and the trend for metal stocks over the next 1 to 3 months looks to be extremely positive.
Okay, all right. So that's the take coming in where metals is concerned. 2.5% high on Vedanta as well. But shifting focus, ISMA seeks urgent intervention from the government to mitigate challenges faced by the sugar sector. Urges to allow sugar of 20 lakh tons for this season. My colleague caught up with Vice President of ISMA, Neeraj Shirgaonkar, to get his views on the same.
The main concern is that the sugar industry was earlier the backbone of the ethanol blending program, and we started a decade ago. And we had allocations of close to 80-90% of the total tender for so many years. But now with the increased capacities, our industry has just received 28% of the allocations. And due to this, there is going to be a lot of idle capacity which is going to remain from the point of view of manufacturing ethanol. And due to that, there is going to be a more sugar, surplus sugar, which will also remain, which can lead to further problems with the prices. So that is the main reason why we are saying that we should restore our allocation to the times of the old, where we had at least, at that time we had 90%, but now we are at least asking that 50 to 60% of the allocations should go to the sugar industry.
Government has clarified that on E20, as of now it will remain E20, they are not going to extend it. The blending percentage might not increase as of now. Then what is the sugar industry's take? Also, if government doesn't listen or does not take any decision which is in your probable favor, then what's the next step you might take?
See, right now we have already put up the capacities. So we are in discussion with the government to make sure that the demand increases. Now, by increasing demand, we have to go similar to the Brazilian model, where they have over a period of time developed a fleet of flex fuel vehicles. They are given tax benefits, GST benefits to the manufacturers, so that they have a level playing field with the EVs. And so that they are incentivized to produce models which can take our ethanol, the blending beyond whatever it is, up to E100, like you said, or E85. वो करने के लिए we need to make sure that the demand side is, along with the taxation structures, is totally taken care of. So we need to work on these lines because the capacities have been created now. It is a question of getting the demand and then supplying to those capacities.
Okay. All right. So that's on ISMA. Now, Larsen and Toubro set to report its Q2 earnings, where the street is expecting an uptick in the top line and EBITDA, but might see a slight downtick in the margins and net profit. Kanishka here to tell us what to expect.
Well, L&T is all set to report its earnings later today for the second quarter of the fiscal, and it's largely going to be a strong quarter, though margin is likely to take a bit of a dip. But let's start with the financials then. Revenue, that is expected to come in at around 70,500 crore rupees. That's an uptick of about 14.5% on a year-on-year basis. If we talk about EBITDA, that is likely to see a growth of about 11% on a year-on-year basis to that 7,000 odd crore level. Other than that, margins, they are expected to stay nearly stable at that 10% level. Net profit, as I said, that could take a slight bit of a dip, 2.6% on a year-on-year basis to that 4,005 crore rupees level. That's due to a higher base in the corresponding quarter. Order inflows, that of course is going to be the key highlight for a company like L&T. And orders for the quarter are expected to be at 85,000 crore rupees. This is what analysts are estimating. Now remember, 35,000 crore rupees worth of orders have already been disclosed by the company. Now growth drivers could include civil infrastructure, hydrocarbons, power transmission and large international projects, especially in the Middle East and GCCs. Apart from that, margins, like I said, are likely to be supported by higher hydrocarbon mix, though limited gains are expected from mega project execution. In fact, analysts are also seeing strong overseas performance offsetting slower domestic recovery. Some of the key monitorables, they are going to include progress on delayed domestic infra orders, ramp up in Saudi projects, working capital management, and the pace of margin recovery in the core E&C business, which is expected to play out by FY 27-28. So yes, these are all the factors that we need to watch out for, as L&T is all set to report its earnings later today.
Thank you so much for that, Kanishka, and that's of course the expectation around L&T. But what we're going to do is we're going to bring you a corporate conversation. Big buzzer today is at DCM Sriram, and we're going to speak with the management on the other side of this very, very short break. Stay with us here on ET Now. Well, we promised you a corporate conversation. We'll get you that. Amit Agarwal, Executive Director and Group CFO at DCM Sriram, joining us this afternoon. Thank you so much, Amit, for joining us, and sincere apologies to keep you waiting for the last 5 minutes or so. Thank you so much, though, for joining us. Give us a sense. The numbers were stronger. Generally Q2 for you has been weak seasonally, at least over the last couple of years. What's changed in this quarter? What are you seeing in terms of a uptick, which is driving that number when I'm looking at it YOY?
Yeah, thanks. So see, what is driving the performance is essentially the volume growth across our businesses. So if you see on chemical front, since we've invested a few thousand crores, almost 3 to 4 thousand crores by FY25 is what we'd invested. And there are more investments happening in chemicals business. But then whatever we've invested, that is adding to volume significantly. So that was the key driver. Along with that, we are seeing good volumes in our agri-input business, which is Shriram Farm Solutions, and also in the Finesta business. So these three businesses grew the top line. That is point number one. On margin front, also we have seen expansion in chemicals, which was driven by both better product prices as well as the cost reduction. I think company has been working on that for quite some time, and we are seeing the benefits of that now.
And what does this do for your full year FY26 guidance, sir? At the end of Q1, you were at 10%, which is the bottom end of that guidance. What happens now, given this slightly stronger performance in Q2? Does it give you the confidence to up your guidance for FY26 full year?
Yeah, sure. I think we should be in the range of around 12 to 15% for the full year basis on the top line.
Afternoon. I also want to talk about this acquisition, Salt Works. Tell me, what does it bring on the table, and how is it that it actually sort of, acts as a tailwind to your supply chain?
Yeah. So see, this acquisition is more in terms of securing our raw material, both on the supply side as well as on the cost side. Now, our requirement for salt is huge, given that our caustic capacity is 1 million ton, which is second largest in the country. Our requirement for salt is close to about 1.5 million tons. And that is one reason. Now, second is the salt forms almost 20% of our cost of production. Thirdly, we are seeing that the demand for salt in next 5 years will grow from about 33-34 million tons to about 43-44 million tons. On top of that, the availability of new salt farms is far and few, given that a lot of salt farms which would have been available are getting converted or are being allocated to the solar farms. So given all that, we felt it's time now for us to look at captive salt farms, and that's the start of the journey.
And give us a sense, caustic soda, how are margins shaping up on that business? Because and how are you fixing chlorine disposal and the like in terms of the issues? How much progress have you made there?
So margins, as I mentioned, given that the prices have been better and more on the cost side, where over the last 1.5 years, through various measures, both on efficiency as well as the market has been kind on coal costs, the costs have come down along with renewable energy that we have pumped into the system, and we're pumping in more. So the cost side has improved, prices have been a little better. So the margins are more sustainable now.
Through this, PVC prices, how are they shaping up? Do you have some color? Is there any positivity on that count? Give us a sense. Second, subsidy delays, especially on the fertilizer front. Give us a sense on what's happening there, sir.
Yeah. So coming to your first question on PVC, see, prices have been subdued for quite some time. For many quarters, we have talked about prices being subdued, given the dumping from China and our efforts as an industry to get the ADD imposed. Now that's work in progress. We expect something to come on ADD in next 1 month. If at all something comes up and it is accepted by Ministry of Finance, then we should see an uptick in prices by about 4,000 to 5,000 rupees per ton from the current levels. And coming to your next question on subsidy, I would say government has done exceedingly well on subsidy. The subsidy outstandings are very normal. They are in line with what they should be. So we're not seeing any pressure on subsidy.
Got it. Okay. I mean, great having you on the show. Thank you so much for your time today.
Yeah, thanks.
Okay, let's just bring up the stock price for DCM Shriram as well, tell you how it's currently moving on in trade. And that's holding up a solid 3% as we speak right now. Just checking in on the rest of the market as well. Just want to refresh my screen before we talk about where the markets have been so far. A good 160 points higher actually for the Nifty futures. 26,250 is where we're currently at for the futures. And it's the Adani names and metals. They're the ones which are really powering the Nifty forward. In fact, even other names like an NTPC, for instance, are catching up. Look at NTPC. That's holding up a solid 3% now in trade. And this is not how the stock actually began in today's trading session. Right now, of course, it's contributing quite a fair bit. Adani Ports, Adani Enterprises, both those stocks almost clocking in a 3% gain. Look at an Adani Green. That stock is holding higher by 11.5%. Again, a very strong earnings reaction coming in there. Or for that matter, then, SAIL, which is now sitting on a solid 7% gain. JSW Steel, which is higher by 2.6%. Tata Steel up 2% right now in trade. So that's where the direction for the market is currently. But the one space which is soured is definitely the brokerages today. And SEBI has released a consultation paper proposing a major overhaul of the mutual fund regulations. Now, the draft aims to simplify compliance, boost transparency, strengthen investor protection. Key changes also include scrapping of the extra 5 basis points fee where exit loads apply, revising expense ratio norms to exclude statutory levies, and also slashing brokerage caps as well. Ankur Mishra, my colleague, is here with more details on what exactly does this consultation paper entail.
Yes, market regulator SEBI has issued a consultation paper on a review of mutual fund regulations of 1996, and there are quite important factors which will impact not only brokerage houses but AMCs. If you talk about AMCs, they will not be able to charge additional 5 basis point expense on the schemes where exit load is levied. And if you talk about the expense ratio, now that slab will be revised, and that will exclude the levies like GST, STT, CTT and stamp duty. So that needs to be separate as per consultation paper. Now, if you talk about brokerage houses, there is a cap which is reduced from 12 basis point currently to 2 basis point for cash market and 5 basis point to 1 basis point for derivatives. Now this will have a huge impact on brokerage houses as well, and the market regulator is also mentioning that differential expense ratio based on fund performance can be introduced as a voluntary option for AMCs, but it is not that the regulator is trying to curb the expenses. There is a bit of positive news for AMCs as well, whereby the trustee meeting frequency has been reduced to 1 from 3 months and minimum 4 per year. So that is a kind of a relaxation. AMCs can now send the annual reports and summaries digitally to investors, and more importantly, the newspaper ads for scheme changes replaced with digital disclosures on AMC website. So that expense will be curbed for the AMCs as well as the trustees of our mutual funds. But all in all, the regulator wants to arrest kind of a dual charging by the AMCs for giving kind of a research. So therefore, that will take a hit on brokerages as well as AMCs.
Right, okay, that's the clarification coming in on what the consultation paper that SEBI is intending for mutual funds actually entails. In fact, let me welcome on board Sunil Subramaniam as well. Perhaps he too would have a view over here. Sunil, okay, and we also have Jimit Patel here with us to get a sense on the same. But gentlemen, both of you, afternoon. Sunil, let me start off with the conversation with you, and just wanted to understand, how do you think this move is actually going to impact the MF industry to begin with? Sunil, you'll have to unmute yourself.
Yeah, hi. So I think that, overall it's going to help the industry in terms of expansion, because I think clear cut, there's going to be a 15 basis points reduction in the cost of mutual funds, right, to the customer. So I think to that extent, the compounding effect of that 15 basis points as a cap, which has come down, should help overall the industry's returns as well as customers to do that. But within the industry, the various players, right, the impact will obviously vary. So what's happened is that now I just heard the discussion that you had with your team member there, but I have a slightly different view, right? So first is that broking houses are getting impacted. You're saying from 12 basis points down to 2. But the reality is that most AMCs are not paying 12. They have negotiated this. The average is about 5 to 7 basis points. Now, the second is that it's not those brokers are going to lose that bit because all it says is that the customer can be charged only 2. So if an AMC, let's say, is paying 6, the 6 minus 2 will come out of the expense ratio, which is already there. And there the choice is whether the AMC picks it up or they reduce distributor commission. Now, AMC to AMC, it will vary depending on the distributor negotiation, it will vary. But the point of the matter is, two broking houses, the knee-jerk reaction in the market today, I feel is a good time to buy because brokerage houses are providing that research for which they are getting that fee is going paid as a part of the transaction charges. But I think a top quality broker who's giving good quality service, this is not going to make them reduce that fee significantly. So today has been a knee-jerk reaction to the reaction as far as broking is concerned. The second aspect there is that, of course, AMCs in terms of the reduction of the 15 basis points. On AMCs itself, I don't think that impact is going to be that strong because they will pass this on to the distributors. So, as a reduction in the brokerage cost. So, to that extent, AMCs, I feel if there's a negative reaction today to the AMC thing, I think even that's a good opportunity to buy. Now, you come to the third angle of it is for distributors. Yes, there will be a reduction in their trail commissions by the bigger AMCs, especially because the bigger schemes are the ones which suffering the biggest 15 basis point cut. So they will naturally see a reduction. But what's also happened is that SEBI has also helped them another way because they have now allowed the GST on the trail commission, which was paid from the scheme, to be paid outside. So, which means that I think that this is my interpretation. So, in which case, the mutual fund distributors can set off this as the input tax credit against the expenses they have. So, while they may lose on the trail commission, on a post GST basis, their income will also get protected. So, overall, I think that it reduces costs for the customer. I think AMCs and the people manage this situation, and the GST thing will come and help even the distributor. So, I think that today the reaction is a bit of a nervousness to this, but overall, I think it's a decision which will help expand the industry and is in the interest of customers.
Right, fair point. But Jimmy, let me get you in on this conversation. Firstly, on the curtailing of brokerage payment, how do you think that piece will pan out?
As my colleague just mentioned, Sunil, it's most of the players were paying 5 to 6 pips, which also the data point shared by the regulator states that. In addition to that, what is also stated in the regulation is that while you may charge 2 bips or 1 bip, the balance can be part of TER. It can still be part of AMC. So if a smaller AMC were to pay a 5 bip or 6 bips, because for a smaller AMC, getting a 2 bips and a 1 bip is highly difficult because of the sheer volume. No broker is going to charge a 2 bip and a 1 bip to a smaller AMC. So there, the smaller AMCs on the contrary will take a hit rather than the broker. And unfortunately, the regulator says that the difference between the brokerage paid minus 2 bips or 1 bip can be part of TER. In addition to that, there is also provision that any expense over and above the TER after plowing back of the management fees can also be borne by the AMC or the sponsor. So all those tools are available. Plus, the most important thing that we are all missing out is expenses that were part of TER were earlier all inclusive of GST, be it the RNT fees or the custody fees or your banking charges, etc. Now, GST component or any statutory levies or even a stamp duty have been carved out outside the ambit of TER. So all expenses which earlier were inclusive of GST will be accounted for at their nominal value, and GST thereon will be over and above TER. So if you accumulate the GST component of all the expenses, including the management fees, the cut of 15 bips will more or less take care of. So there won't be a bip in the earnings of the AMC. The distributor, currently the commission is inclusive of GST. Now that will also be excluding GST. So again, an accounting set off can be made available by the distributor fraternity. One has to wait and watch how the different service providers provide data points in terms of cost plus GST thereon to enable the AMCs to book their expenses properly within the permitted avenue of 2.1 or 1.9 as permitted by SEBI.
Let me also welcome on board Akhil Chaturvedi, the CBO and ED at Motilal Oswal AMC, joining in on the show right now. Also, Akhil, hi, afternoon. Want to get you in on the conversation. What do you think will be the net result if indeed this consultation paper actually goes through? You think AMCs will then sort of negotiate lower brokerages from their brokers if this rule does go through?
So, Aisha, I think, Jimmy is given a very detailed understanding of how the expense ratio is going to work. But broadly, if you see that we feel that there should be a negligible impact between the commission arrangements between AMCs and distributors, because as Jimmy explained that while there is a 15 basis cut on the base TERs, the GST and the other costs have become exclusive, right? So it should be revenue neutral to both the parties. I think one particular cost item, which is the 5 basis point, which is being charged in addition in lieu of the exit load, which goes away completely, right? So to that extent, maybe there could be some normalization, one-time effect between AMCs and distributors. But for the regular business, I don't see too much of impact or negotiation either ways.
Okay. Sunil, if I were to come back to you, give us a sense. So, yes, definitely this is a decadal theme, right? But what's in your opinion, what's the likely impact and who is going to be the most impacted by these regulations, the adverse impact? Give us a sense on what you believe is going to be the adverse impact and what should one keep in mind in terms of the quantum of the adverse impact?
So I think if you ask me the adverse impact, I'll take it as two parts. One is from a stock market participants and a non-stock market participants, right? So the overall regulations today impact broking houses, AMCs, and listed distribution partners, right? So these three other listed players. And I think between them, there will be not much impact because to answer the question there, for brokers, like I said, the average is already being charged 5 to 6. 2 will now come from outside of the scheme and the balance 3 to 4 will come from inside the scheme, right? To the extent that there's a little bit of a hit to the AMC, I think there's also the fact that there's a 15 basis points cut in TER. So at the lower end of the distribution pack, which are not the listed AMCs, but the smaller MFDs, they probably take a little bit of more of the brunt. But the listed bigger distribution houses will be able to negotiate a reasonably better commission structure. So I don't see them also getting affected. And as far as the AMCs is concerned, because there is this huge pool of large set of mutual fund distributors who are at the base end of the bottom of the pyramid, right? Passing on a little bit of them, they will be able to manage. So to me, really speaking, there's a big negative reaction to any listed player in the stock market because of this. There will be some impact on the smaller marginal players whose negotiating powers are naturally not as strong as the bigger players. So I think that's the way I would summarize this.
And Jimmy, if I can come to you, give us a sense on, would you be able to in some form give us a sense on what the impact for an AMC will typically be? I know it's hard to determine and it will also depend on what the brokerage currently is like, but some of the larger brokers obviously might benefit a little bit more.
On the AMC front, as I mentioned, because of the GST component, it has to be expense neutral in that sense at an overall expense booking perspective. If we were to look at exclusively only from a brokerage perspective, yes, there might be some hit because, as I mentioned, the smaller players may not be in a position to negotiate that well with the broking houses, and the broking commission or the brokerage may not necessarily come down to 2 bips or 1 bip because of the sheer volume that the smaller AMCs offer. So there probably the broking houses will have an upper hand in terms of leveraging their strength for the efficiency in dealing vis-a-vis a smaller AMC. As far as rest of the cost structure goes, nothing changes. 15 bips gets compensated or gets neutralized by virtue of the GST component.
Excellent, super clear. Akhil, give us a sense as to what this means from a customer standpoint. Does this make life better for the customer, you believe, in the longer run, or does this bring or does it leave it open for further reform in this space? Is that something that one should fear? So from a customer and from a business standpoint, give us a sense.
So, I mean, if you see over the last a decade or so, I think every time the industry is achieving a significant milestone, there are economies of scale, and clearly the direction given by the regulators is every time there is a economies of scale, the benefit has to be passed on to the end investor. And over a period of time, we've seen that there have been significant reforms as far as TERs, entry loads, exit loads, all of these things go. We are still in the growth phase as an industry, and I think there are miles to go, and the industry can become a lot more bigger in size over the next 5, 10, 15 years. And therefore, I think the reforms probably would continue. I mean, the last reform happened in 2018, I believe. At that time, the industry was about 25 lakh crores. Today, we are 75 lakh crores, right? So I think the reforms will continue, and clearly investors will keep benefiting from the incremental reforms. This time around, I think the reduction of the trade cost or the brokerages paid to brokers for trades coming down by 10 basis points is like it's a meaningful cut in terms of operating expense, and that benefit will eventually be realized by the investors. So yeah, they stand to gain definitely.
Okay, Akhil, Jimmy, Sunil, thank you so much for joining us, gentlemen, for this discussion. It's been an engaging one. Thanks so much for coming in and speaking with us. All right, and what we'll do, viewers, is we'll slip into a very short break. We'll take a bit of a breather. On the other side, we'll continue to talk stocks. Some really flying. Varun Beverages is up nearly 10%. Let's talk about that once we're back.
Back on closing trades, and we're coming to you live from the SBI Live studios, holding up still very well actually for the indexes. We're clinging on to that 26,000 level in trade as we speak right now, with gains really coming in from the Adani group of names, some of the energy plays, and of course metals. They are the ones which are really leading from the front right now. So the technology names also, to be fair, are the ones which are bobbing up. Look at an HCL Technologies, for instance, for that matter. Some of the other blue chips like an SBI, Reliance, and Titan has put on another 1% in trade. Kunal, you were mentioning in the morning that ever since, I think, Diwali or the festive period began, Titan has really turned the corner, and this is coinciding with gold being at an all-time high. Yes, for the last couple of trades, it's cooled off a little bit as well. But finally, you're seeing a big breakout in Titan.
Well, absolutely, yes. In fact, it's moving exactly opposite of the gold price movement. When the point, when the peak of the gold prices happened, that was the point when Titan corrected by 10%. And, for a large cap name like Titan, which has moved over the last 2 decades and more, I think to fall by a margin of 10% in a period of, I think, 3 weeks, 4 weeks, I think is a very strong kind of a corrective wave, and that requires generally some sort of news flow or event surrounding the stock price. But then what I like about the stock chart, and the reason why I recommended was this recovery which had happened for Titan from the 3,300-ish short levels, which had formed a low, I think, in the previous month, September to be precise. So I think from there the recovery has been quite smart. The stock is now on the verge of a major breakout, which is now visible more clearly on the monthly charts. That, I believe, could be a big trigger for Titan. And then, the base asset class, which is gold prices, we are looking at some moderation happening in the gold prices. So that means that we could be looking at some bit of a consolidation in that asset class over the next couple of months. Even that would probably, help the prices move up higher for the stock in the near term.
Okay, so Titan in focus, of course. You'll have numbers come through fairly soon, which is next week. Sunil, would you have a view on gems and jewelry? Is this something at all that you would bet on, given the rally in gold and maybe a bit of a cool off now? There's been a pullback. Would that at all make you feel that this is a space that one needs to bite into?
Yes, I think so. See, basically what's happened is that all the jewelry shops, if you notice, they use this trade-in a lot. So people are also coming and putting in their old jewelry because of the high prices and trading it in. And in that trading process, the jewelry shops, the gems and jewelry sector makes money. So that's, I think, definitely because there's the wastage charges, there's a cost of the old gold, they take off some shave of something, there's making charges. So they actually the trade in, right? The customer may feel that, oh, I'm giving my old gold getting new, but there's a huge margin uptick which comes into the jeweler because of this trade in. Okay, he makes profit on all the legs. He makes profit on the price that he buys the gold. He makes the profit on the making of the new jewelry and sells it at the new price. So I think overall that's good. Second, on the gems and jewelry side is because of this whole tariff season. As you know, that's the one place where I think about 12% of US gems and jewelry is from India. So any good news there happening, right? I think it's going to be a huge pickup for the gems and jewelry industry. So because now there's been pressure because of the tariff on that export-oriented gems and jewelry, I think it's a good time to buy because we know this is going to get solved. Mr. Trump has again tweeted saying, oh, I'm going to have a great deal with Modi and all of that. So sooner or later that gets solved. And I think then you will see a rally happen and you will regret that you didn't buy today. So overall, I still be very positive on the gems and jewelry today.
Okay, that's the word coming in on what's really happening within the gems and jewelry space, and of course, Titan really reversing trend. But ahead of the crucial meeting with Xi Jinping, Donald Trump reiterates his friendship and respect for PM Modi at the APEC summit in South Korea, says that he plans to strike a deal with India soon, adds that India and Pakistan could have faced a 250% tariff if they hadn't stopped fighting.
I'm doing a trade deal with India, and I have great respect and love. As you know, for Prime Minister Modi, we have a great relationship. We can't make a trade deal with you. No, we must make a trade deal. I said, no, we can't. You're starting a war with Pakistan. We're not going to do it. And then I called Pakistan. I said, we're not going to do trade with you because you're fighting with India. And, you know, two nuclear nations. And they said, no, you should let us fight. They both said that. You know, they're warring. They're strong people, I'll tell you what. Prime Minister Modi is the nicest looking guy. He says, oh, and he looks like you'd like to have your father, like, he's a killer. He's tough as hell. No, we will fight. I said, whoa, this is the same man that I know. But after a little while, and they're good people, and after literally 2 days, they called up and they said, we understand, and they stopped fighting. How is that? Isn't that amazing? Now, you think Biden would have done that? I don't think so. Most people wouldn't have thought of it, but, you know, they wouldn't have thought of it. No, but here we are, we're doing deals. So you add an extra sentence, and you say you have to stop shooting at each other. 7 planes were shot down. You have to stop the war.
Well, still ending wars, that's true Trump for you. But I think the bigger takeaway is that a trade deal could happen soon, right?
That's true. And that will, of course, keep markets enthused as well.
I think that's what, I think this is what the markets have started to factor in. I think it could just be a matter of time that the news could probably be out.
Okay.
Post-Diwali.
Yeah, fireworks are fading. Yeah. But yeah, that really seems to be the case. I mean, who would have thought till, I think, even a fortnight back that we're going to be sitting at 26,200 levels. It was just such a listless market, but finally we seem to have broken out. But yeah, back to earnings as well. The deal will, of course, happen when it happens and will be sealed when it has to be sealed. But Varun Beverages, they came out with their Q3 numbers and the net profit has come out much better than expectations. Snehi is here with all the numbers.
Well, yeah, so the reason why Varun Beverages is doing exceptionally well in trade today is because there's a beat on their profit number versus estimates. But other than that, it's the slew of announcements that they have made along with their Q3 earnings. We'll get to that in a bit. Let's take a look at what the standalone year-on-year numbers look like. Revenue has come out revenue has come out at 4,897 crore rupees, which is up about 2% year-on-year basis. Net profit at 741. The estimate was 622 crores, so much better than estimates over here. EBITDA has seen a slight slight cut of 0.5%. EBITDA margins are also down by 53 bips at 23.4% compared to 24%. Now here are some of the highlights. The consolidated sales volume is up 2.5%, almost a 2.4%, supported by healthy traction in international markets. The international markets number is up 9%. India growth is absolutely flat. There's also a sharp spike in other income that has aided the top line this time around from 24 crores to 148 crores in terms of other income. Now that they have made an amendment in their articles of association wherein they say that they've revealed plans to enter the broader alcoholic beverages sector. This includes the manufacturing, selling and distribution of beer, wine and spirits in India and other markets. Now remember, so far Varun Beverages was a soft drink company, a soft drink bottlers company, and their expansion into alcohol and alco-bev is a very big positive coming in for the company. For the same, they've incorporated a wholly owned subsidiary in Kenya for manufacturing, distribution and selling for beverages, and their African subsidiaries. We'll start with that. So the company is going to be looking at the African subsidiaries shall test market beer in their territories with an exclusive distribution agreement with Carlsberg breweries for their Carlsberg beer brand. So this is their foray into the alco-bev space, which is the reason why the stock is very excited. Of course, the beat on PAT is also aiding the stock, but these are some of the reasons why Varun Beverage is doing exceptionally well in today's trade.
Okay, let's also get in a take from the Varun Beverages con call. Let's listen into what the management said.
With some of their RTD products.
So thanks. That's all from my side. Thank you.
Thank you. Our next question comes from the line of Aditya Soman from CLSA. Please go ahead.
Yeah, hi. Good afternoon. So two questions. So firstly, in India, can you give us a sense of which categories and brands have and how they performed during the quarter, particularly with some of these sort of fruit beverages or fruit-based drinks and the milk beverages? Any sort of pickup we've seen post the GST cuts? And second, on the alcobev piece again, in Africa, this Carlsberg partnership, can you sort of also, is it applicable for every country that you operate in Africa, or it's only a few countries to start with?
So first of all, you know, the GST cut has for the quarter has only been for 8 days, so it's too early to say. But overall, we've had tremendous growth in our hydration category, which is Nimbus. We've grown more than 50% in that. And we've had an excellent growth in our value-added dairy. We've practically grown at about 100%. And we see both these categories still firing and doing extremely well. If the weather was slightly favorable, I think they would have done it much better than what they have. And regarding your question of Africa, we've got most of the Southern Africa understanding with them, but starting with 1 or 2 countries, and then we'll take it forward.
I understand, very clear. And just on that first question again, last quarter you said that Sting Gold wasn't as successful, maybe because of the weather and all of that. So any plans to relaunch this or push this more, or do you think you'll have to come back with a new product?
Well, we've come back with a much better product and a product which is on medium priced, not at the price of Sting, but much higher price and not at the price of Red Bull. It's a medium price where it's priced at 60 rupees, and this is a very fabulous product which we have just launched actually day before yesterday only. And it's called Adrenaline Rush, A-Rush we call it. And we think there is a huge market for this, there is a huge scope for this, and we are expecting a very good response on this. So we are testing it, and we have launched it in 4 cities, and we're going to take it forward.
All right, so that's the management of Varun Beverages. The stock obviously up and away in trade, 9% higher, PAT beat, some bit of other income aiding the profit numbers, but it's that venture with Carlsberg that is keeping the street enthused. So plenty to look out for. What we'll do is we'll slip into a very short break. On the other side, we'll continue to talk stocks. Stay with us here on ET Now.
Okay, let me welcome on board Shrikant Chauhan as well as Rajat Sharma too into the conversation. Shrikant, hi, afternoon. Let me start off with you. What's the market texture telling you? While, of course, the Nifty has scaled up nicely, it's metals which are the biggest contributors today and the Adani group of names. Anywhere you think there is a trade possibility, maybe today, tomorrow?
Yeah, good afternoon. So while looking at the entire setup of the market, we are of the view that the market is going to consolidate for some more time between the range of 26,100 and maybe 25,900 on the downside. But broadly, we are of the view that the market is finally preparing for crossing the all-time highs, which was around 26,275. So crossing that level can lift the market towards the levels of 26,500 sort of levels. We are basically bullish on the market and we should look for taking some long bets if there is any correction in the market. And as you said, metals, yes, they are doing really well. From that space, we like GMDC, which is currently around 595, 596 sort of levels. There we feel that the stock is currently consolidating at the lower boundary. But while looking at its setup, it is preparing to move towards the levels of 630, 640. So at this level, it looks a very decent candidate to buy for. And the other stock on which we are bullish is IREDA. Today, we are seeing some buying interest in those companies which are specifically into this NBFC business. IREDA looks very like specific technical strong bet to buy for with a target of 163, 165, and we can keep a stop loss around 149 for the same.
Okay. All right. Rajat, your sense with regard to what sectors will likely lead the market rally if there were to be one, maybe over the next 12 months, or which sectors will likely outperform? Give us a sense.
Hi, good afternoon. To my mind, you have to ask me, a couple of sectors which I'm really positive on right now. One would be banking, with everything that the government is doing in the banking sector to open it up. And the other would be IT. And I think IT, because the valuations there are extremely low. And I think the reason for that is primarily the US-India trade tensions that have been going on for far too long. And second, that for a long time, there was this view that Indian IT companies have not been able to embrace artificial intelligence very well. That has, changed under the surface. So the companies that I'm looking at and that we're looking to initiate investment in, they're essentially, at the forefront of embracing artificial intelligence, and they're doing some solid work for companies all over the world. So IT and banking, to my mind, would be the two sectors which, should lead this rally from here on in the next 12 to 18 months.
A couple of stocks which are doing well today, Rajat. One being Blue Dart. Just the type of numbers that they've disclosed is very strong, and nearly 30% growth on a YOY basis. Now, if I were to take a step back and just think about maybe the last month or so, you've got very strong ordering, whether online or whether moving of product from one city to another, just given the demand, the consumer demand that has bounced back, and whether you call it pent-up demand or otherwise, you believe that some of these logistics players might well come to the fore for the next couple of quarters, given this change in bottlenecks around supply chains that have come up?
No, that's a very valid point. I think definitely consumption is going to be higher given what's happened with GST, and people will obviously, we've just come out of a festive season towards the end of the year. So there would be a lot more ordering, a lot more buying activity, and these days nobody goes to a store. So obviously, I think logistical players, Blue Dart, Delivery, all of these companies should get a lot more demand. Having said that, I've not looked at these stocks so closely right now that I could comment on them. Not really initiated anything there, so wrong for me to talk about these. But yes, you make a very strong point. I think consumption is going up, and logistical players should benefit from it because most of it is online now.
Right, okay, that's the take coming in on Blue Dart right now, which is reacting, of course, to its earnings. In the meantime, just looking at some of the other movers, and AMCs, of course, they're the ones which are really getting hard hit, or for that matter, some of the brokerages. Look at an HDFC AMC, for instance, that's down about 5%. 361, that's down about almost 4%. There's CAMS as well, lower by 3.5% as we speak right now. Rajat, because of this new SEBI consultation paper on mutual funds, there's obviously a lot of nervousness and panic in the entire capital market space, right? Do you think today's nervousness should be utilized as a buying opportunity, perhaps?
I wouldn't necessarily think so. If you're talking about buying into some of these AMC companies, I wouldn't think it will have any meaningful impact. The consultation paper, I think the worry which at least we guys have as participants in financial service spaces with the KYC norms, and if they're going to make these KYC norms harder, it just makes things more difficult for us. And there's so many of these AMC companies getting listed, and a lot of them trading at extreme valuations. I've looked at a lot of these, thought about initiating buying into some of these companies, and not just AMCs. The broader spectrum of financial services companies like BSE and CDSL. I find a lot of these extremely, extremely expensive right now. So any correction in the markets could take these down a bit. I mean, look at the way SIP book has expanded. The monthly SIP book from 1,000 crore has reached to 28,000 crore in the past 15 years. So at some point, there has to be a slowdown to that. So not really excited about this space either, Aisha. I'm sorry.
That's absolutely fair. Kunal, give us a take with regard to some of these power financiers, REC, PFC. The guidance has been was around 11-12% in terms of growth, and this is of course on the fundamental side. 11-12% growth guidance. 7% is what they clocked in Q2, and that's why you saw some bit of tepidness on the stock. But we're seeing a bounce back on some of those names. 4% higher on an REC, PFC, looking interesting.
They're looking very interesting, frankly, and they've been huge underperformers for the last, I think, 11 months on a trot, where you've seen these stocks underperforming. And when you see a 50% discount broadly for these stocks from their 2024 highs, and then you look at the market setup that the Nifty is closer to lifetime high levels. PSU stocks broadly have shown signs of good outperformance, of very good recovery from their 2025 lows, or compared to 2024 highs. These stocks have managed to make a comeback. And then when you look at the power financiers, that these stocks are still down 40, 50%, 30, 40% broadly from their lifetime high levels. It tells you that the risk reward is extremely attractive for a buy over here. And I strongly believe that these stocks have those variable beta nature. So in zones, these stocks may go into a massive time-wise consolidation, but when the catch-up has to happen, the beta changes dramatically, and you see the stocks catching up significant pace and trying to cover up the underperformance. I believe that the latter zone is about to kickstart for many of the power financiers. From current levels, I believe REC, PFC, both, they're looking extremely attractive.
Okay, that's REC, PFC, and what the reading is on the charts after the spurt in the stock prices today. But remember, it's almost the beginning of the month, and that often marks key financial activities, salary credits, bill payments, planning expenses. But just as we plan for our expenses, it's equally important to also plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with the Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them to secure their financial future. And as part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP
continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. Let's also listen into what Sanjay Kulshrestha, the Chairman Managing Director of HUDCO, had to say on their disbursements traction with respect to new projects which the company has undertaken. Mind you, HUDCO also a buzz today, 4.5% higher. Listening to what he had to say.
traction is very high because of the support from government, be it the acts which are being amended already, be it the vision of Honorable Prime Minister between 2030. The vision is already launched. The projects are identified. For Amrit Kal Maritime Vision also, we had identified the project, and around 80 lakh crores of the investment by 2047 is identified. But before that, till 2030, around 4 lakh crores projects are identified. And we are working with all the major ports, and we are ready to cover the state maritime boards as well into the investment. We have a vision that we will achieve 1.5 lakh crores loan book by FY26, and by FY30 it will be doubled and becomes around 3 lakh crores. So we are looking at all the opportunities, all the viable projects, bankable projects, and we are working with them.
Claim ratio reduction. So it's a substantial reduction, and Q2 seasonally is a high loss ratio quarter because of the fever and infectious diseases. We have seen a good improvement thanks to our underwriting strategy of writing profitable businesses. We have maintained that for FY28 our ROEs will be in the high teens ROE, and we are working towards it. Our investment portfolio consistently is delivering 8.25% investment return, with a mix of fixed income and equity portfolio. So a good improvement in the combined ratio as well as a robust investment return. We believe that we are on the path towards achieving a high teens ROE.
All right. Welcome back, and thanks for staying with us. Now, one of the other big movers of the day is something like a Bosch. Now, it's actually not a very big mover. It's down just about 3%, but that is on the back of certain constraints certain supply constraints that they are having, due to which they may not, their production may just slow down, is what they have suggested as part of an exchange filing. This came in yesterday, so this is not news, but the stock is taking a bit of a knock, 3% lower. The other piece that's therefore playing out, Bosch supplies also to the likes of an M&M, and therefore you're seeing a bit of a knock also on M&M as a result of that. Anything, if this were to escalate, of course, it will be deeply negative for both of those companies and some of the other four-wheeler as well as two-wheeler makers, because those are the products which are on your screen, which Bosch provides as part of the supply disruptions, which might just slow down in terms of production as well, and therefore you might see that impact on some of the auto counters, and that's why likely the Nifty Auto also not doing the best today. Rajat Sharma, let me come to you on this one. Rajat, what's the sense like? Does this supply of semiconductor, etc., likely impact the auto industry in a big fashion? Is this something to be mindful about, given the kind of run that auto has had? Could this be a potential downside, very real downside risk?
I think a bigger risk for auto is not just supply side disruption on the semiconductors, because this has played out 2-3 times in the past 1 year since the problems between US and China have been going on. We all know that. So I think the supply side has been addressed. If you listen to the commentary coming out from first it was Hyundai and then it was Tata Motors, that's not the bigger problem. What I see as a bigger problem in auto is, from a stock market's perspective, is an intense competition and the switch migration towards EV. That is, I think, leading to a lot of uncertainty in terms of understanding what could be the future growth potential for these companies. Whether you look at Mahindra and Mahindra or Tata Motors, and this is beyond passenger vehicle category. The only sector where you can be certain about this is two-wheeler space, because that has made that migration. But I don't really think that supply side disruption for these components will have a major part to play, because for most part, a lot of these components are now already being assembled in India, so they're not being imported as they were earlier from China to a great extent. So having said that, auto is not a space again that I'm looking at right now. We have Tata Motors in our portfolio. We're waiting for Tata Commercial Vehicle to get listed. But other than that, I'm not holding any auto stocks right now.
Interesting. Shrikant, though, what's the reading on the charts? Autos, auto anchs, where do you think the strength lies?
So yes, we are seeing some profit taking in auto companies. They are finding difficulties to sustain at higher levels. But prominent names like Mahindra and Mahindra, Maruti, I think they should do well. Currently, they are correcting from their highs. Uh, Recently, we saw a very smart run up in almost all the stocks. But currently now they are showing some sign of profit taking. So I'm of the view that in case if there is any further more correction in Mahindra and Mahindra, let's say up to 3,500 or 3,450, there we should look for adding some long positions, because eventually I am of the view that the stock is heading higher. The entire space of Nifty Auto should do well. It will take some time because right now the correction is going on. But broadly, I think this particular space should do well. Maruti is currently correcting from the highs. There also we are seeing corrective pattern only, but at support levels close to 15,750, 15,800, the stock is having excellent support. So maybe for next few days, few weeks, we may see some correction, but otherwise we are bullish on the sector.
Take on metals. Look at that pack. It's in a zone of its own. Shrikant?
Yeah, it's for me.
What about metals? As a pack, it's in a zone of its own.
Yeah, absolutely. The way they are crossing, like Tata Steel kind of stock is crossing its all-time high and it is sustaining comfortably above the same. Today we saw buying interest in one of the most weakest company, that is Steel Authority. Clearly shows that there is good amount of buying interest in almost all the metal companies. And from this steel space, we can expect further more gains, because after a very long time, most of these stocks have crossed their important levels and going up with good volumes along with momentum oscillators. So we can expect further more activity, at least 5 to 7% sort of rally from current levels in almost all the stocks. And we are particularly bullish on Jindal Steel and Power, which is currently trading around 1,080, 1,090. There we have target of close to 1,200. And for Tata Steel, we have target close to 193, 195 in the near term. So in case if there is any correction because of any reason, we should look for adding them, these stocks with a view of short term as well as medium term.
Okay, quite interesting. That's the take coming in on some of those energy plays. Kunal, do you think this is a structurally, bullish pattern that you're seeing on metals? How long will this rally last?
Aisha, I think the best of the metal rallies have lasted for 3, 4, 5 years. 2000, I think 6 to 8, was the prime, time period where, names like Tata Steel and SAIL, they gave returns of, I think, 5x to 10x in that kind of a time span. So, they have that tendency of multiplying, in very short periods of time. And that's why we consider this as a very high beta sector. I actually believe that many of these stocks have that potential to go into a multi-year rally from here also.
But right now, is it looking like that same 2006 kind of setup?
So it depends. If the market, of course, has another 2 years of 3 years of a major uptrend left, then I strongly believe that yes, commodities and metals as a rally should see a substantial upside. That's where I would believe that rather than looking at that, these stocks have rallied up by 10-15%, you've missed the bus. I think if there is a room of another 2-3 years of a major market uptrend, then I strongly believe that this could just be very starting point for the entire metal rally.
Okay, and Kunal, what's the take on a Blue Dart? I know it's locked in upper circuit. What should an investor do at this point? I mean, this has been a one-way move today, and we discussed it today morning, fortunately for us, but we discussed it today morning that the results were strong, but 20% in a day.
Yeah, I think even at current levels, it doesn't look like that the stock is overbought because, the all-time high, the 2025 high for Blue Dart was 9,500. From there, the stock had corrected to 5,500. So it was a decent 40% kind of a correction. And now at 6,500 levels, yes, it's moved up 1,000 points from its recent swing lows, but it's still 3,000 points off the lifetime high levels. And as I explained, that the setup of the market is such that even if you find these stocks maybe 10%, 20% higher from their recent swing lows, if you find that there is a room for these stocks to move up another 20, 30% higher, then I think one has to look at taking those bets over here. So I would believe Blue Dart could fall in that category. And we've typically seen that when stocks end a major phase of a price correction, the initial jolt is of a massive optimism. And that's where, stocks, they change their trend. I strongly believe that Blue Dart could be a stock in that category. So you might have to extend your time frame. You can't be looking at the next 1-2 days of a follow-through up move, but then potentially in the next 1 to 3 months, you may expect the stock to move up another 1,000 points.
Wow, another 1,000 points in the next month or two. Now, some of the other movers, we had a Shree Cements, and we spoke with management as well. The stock is up, is doing well. But the other one, Shrikant, if I can come to you this time around, 11% higher on an Adani Green. Now, I know that the numbers of some of these Adani stocks which came out were fairly good. But this 11% move, in your opinion, any upside from here? Should you be cautious? What's the sense like?
So yes, today we saw a spectacular recovery or maybe rally in the stock from the lower levels. But while looking at its a broader pattern of last 7-8 months, then the stock was like below the levels of 1,050, 1,060 for a considerable time. And since last 2 months, if you see the technical pattern of it, then the stock is like trying to absorb the selling pressure, which was around 1,070, 1,080. Based on its technical formation, I am of the view that the stock is heading for at least 1,300, 1,320 next few weeks. It will take some time, but by and large, the stock is now entered into uptrend and it is heading higher.
Right, okay, Shrikant, Rajat, Kunal, all of you, thank you as always for your time. I'm going to hand it over to Snehi then and have her walk us through the closing trades. Snehi?
Well, yes, all in all, a good day of trade coming in yet again for the market, a 0.5% uptick coming in. And what's surprising is we have managed to stick on above that 26,000 mark for now. Don't want to jinx it. We have a minute and a half left, but still a 130-point uptick coming in on the Nifty. Similar is the case for sensex, 0.5% uptick over there and barely above that 85,000 mark for now. The broader end of the market seems to have done much better because you have a 0.7% uptick coming in on the Nifty mid cap. Small cap also in tandem with the market up 0.5%. If you take a look at the advance decline ratio, very steeply in the favor of the advances, so the market breadth also looking quite healthy. Nifty Bank was up 0.3%, so no complaint from those participants as well. In terms of the overall Nifty gainers, you had Power Grid, NTPC, Adani Ports, HCL Tech and Shriram Finance. On the flip side, some pressure continued to be built on the Nifty by Coal India on the back of weaker than expected numbers, a 2.5% cut over there. Dr. Reddy's Lab, BEL, Eternal, Hero Motor, these were some of your top Nifty 50 losers as well. In terms of sector, the energy stocks have done well today, followed by metal, media, pharma, FMCG, IT, realty. All of these sectors have done well, with Nifty Bank and Nifty PSU Bank being your least sectoral gainers. On the flip side, Nifty Auto was the only sector that has closed in the red. So it was names like SAIL, NMDC, Hindustan Zinc, Hindustan Copper that once again continue to rule the metals index. On the flip side, from the auto space, TVS Motor, M&M, Maruti, Hero Motor, they were under pressure. But on the back of stellar numbers, Blue Dart was up 20% on upper circuit for that stock. Adani Green, Varun Beverages did exceptionally well, a 9% uptick on their beer alcohol foray as well. AB Realty has done exceptionally well for itself as well. So these are some of the winners in today's trading session, along with something like an REC. But well, yes, this is how we've wrapped up for the day. It looks like we have ended above the 26,000 mark, a good 0.5% uptick on the Nifty. Back to you guys in the studio for closing comments.
Right, and that's the next question with Kunal, right? Kunal, when are we seeing that record high being reached? Or a fresh record, I should say, on the Nifty?
I think we waited 13 months. So India took its time to breathe, and I strongly believe now it's time to sprint. I think the sectors are trying to show signs of, that kind of a sprint. PSU banks, metals, I think names like L&T, large cap names, Reliance making a dramatic comeback. That setup is brilliant for the markets. So I believe new high is just a formality, I'd said, or maybe just a matter of few days.
Just a matter of a few days. Okay, so we'll wait and watch for that new high to come through. But with that, it's out of time on this edition of Closing Trades. From Kunal, Ayesha, myself, and everyone who puts this show together, thanks so much for watching. Thanks, Kunal, for joining us.